So it's very likely that you would have just received an email in your inboxes if you have an account with Trading 212. Now, this news isn't particularly good news whatsoever, and what it really does highlight is that really you shouldn't be trusting just single platforms and perhaps should diversify your investments across them. Regardless, if you've been living under a rock, there has been some information lately, and that is this email here. Trading 212 have said that they're updating their maximum order and position sizes. So you look at this and go, oh no, what restrictions have they made this time? Well, it gets a bit deeper than this because maximum order sizes aren't really a big deal for me. However, maximum position sizes are definitely a big deal. This means it limits what you can hold. Furthermore, they've tried to be a little bit clever here, and they've said that the new maximum order and position sizes will be based on each stock's average traded volume and liquidity. For most stocks, the maximum value you can own will still be in the millions, and you can find more information here, which I've clicked into. Now, this in sense sounds like a great idea, right? Okay, look, you're reducing the risk of investors. Therefore, these people aren't going to invest in very low liquidity stocks, get trapped and lose all their money. However, at the same time, if someone has 7 figures to invest, I really don't think they should be limited on their investment options. I believe they have earned the freedom and the right to say, you know what, look, I've got this money, I'm going to invest it. Now, that's not to say those that have 7 figures all know equally how to invest and are very good at it. That's definitely not the case. However, they have likely a greater risk tolerance, and it's likely they're not investing everything at that stage. So to be able to control investors like this is not something I like. And obviously in the past I have come up against Trading 212 due to their policies towards content creators, including myself, and the way that they actually accused me of trying to abuse their system. So obviously I do have a perhaps motive here, but I'm going to try and remain as balanced as possible. It's very likely there could be a new clause, which they've mentioned here, but there could be some legal changes, and this may be reflected in other brokers. But if it's not, it's very interesting to see. Notably here, they've also mentioned that they're updating the maximum order sizes and position sizes for their invest account and ISA. Nothing here mentions their CFDs. Now, CFDs is where they make a prime majority, right, of their income, their money. They are rewarded for people using CFDs. So if they make their invest account and their ISA accounts less attractive to individuals and really try and subconsciously push them towards the CFD section like they have on the app, having the CFD as the first open available thing for you, then obviously they're going to make more money. So what if this is a subtle way of Trading 212 going, you know what, look, we're going to make our invest and ISA account slightly worse. We're going to encourage people to invest money in our CFDs, which are inherently risky. We know that, but we make more money from it. After all, we are offering our invest and ISA platforms for free. Therefore, well, they should be able to expect this. And I suppose in a way it's a highlight. Do you really want to be with these commission-free brokers? Because these commission-free brokers, you end up paying for something at the end of the day. Now, that said, you might go, okay, well, what am I paying for? Well, now you're paying to have a reduced position size. You're now paying to potentially reduce your stock market returns. Is that truly worth it just because you save a couple quid here and there on the platform? Why not pay a fixed monthly fee and at least say, okay, look, at least I'm supporting the company have a sustainable income stream, and therefore they are not rewarded for trying to entice investors into gambling on CFDs in the stock market. Now, initially, I was skeptical. I thought this could be a good idea. However, you'll notice there are some pretty big companies here, substantial investments that you might want to make, such as, for instance, the likes of Apple. And you're restricted here at a $1.25 million position. Now, you might go, well, Oz, not everyone has a $1.2 million sat in the bank account, do we? And that's very true, but if you'd like to grow your positions over time and you're now limited on this platform to have that, that's ridiculous. Sure, it's a good problem to have, but if you have this money lying around, then you have absolutely no reason to be invested in Trading 212 whatsoever. Furthermore, you look at other things. Let's say, look at Costco. You got the same thing here. Costco is regarded as pretty much one of the highest quality companies around at the moment with a very strong moat. You're only allowed $1.25 million of these shares. Well, what about Amazon? Another big company. I imagine it's probably going to be the same. $1.25 million. Now, I did try and look around for UK stocks, and as far as I'm aware, I've not been able to see any. So my knowledge here is a little bit more limited, but you have got the likes of, for instance, Argo Blockchain here, which is definitely a UK stock, where you're limited at a $38,000 position, which could be right, could be wrong. I have a feeling it's very... I don't know, because there are some UK stocks here, but some aren't here. So let's try and look for something we all know. Let's look for Legal & General. See, that doesn't come up when I search for it. So there's certainly perhaps some limits on holdings here that look quite interesting. And don't get me wrong, I did try looking for Boohoo, but I can also see like Tritax, Big Box REIT, and this is a 500k maximum position size. Now, if you're investing and you're investing for the longer term to really build up these positions, then this is a significant concern for any investor. If they've done this once, what is stopping them from doing this again in the future and further restricting position sizes and maximum order sizes? This, to me, is a concern. If I was on trading 212 right now, which I have not been doing so for the last year and a half, then I would be certainly looking to move elsewhere with an in-species transfer, likely to another available platform or broker. But it's not my place to suggest that platform or broker. I would just be very cautious here. That said, Trading 212 is still a good platform. There are some good features on it and it has a good UI. But I don't think I would be putting too much of my money on this platform. And if I have an ISA elsewhere, well, the ISA is going elsewhere. That's that. But if, for instance, if I use the invest account and I have a general investment account, then sure, a bit of money here and there won't do any harm. And for most investors that are only investing small sums of change, then this doesn't affect you in any way, shape, or form. But for those of you that do want to grow your wealth in the stock market, I would be significantly concerned about what the business is doing. I hope you enjoyed this video. Let me know what you think about Trading 212 and what they've done recently in the comment section down below. Have a fantastic day.